Welcome to the StockManor.com studios here in the beautiful Black Hills of South Dakota. I'm your stock manager, Brian Johnson, and I'm making professional trading simple. And here we are after another good down day. Well, I'm not exactly sure if it's a down day, to be honest with you. I was checking out Google Finance here, and apparently Wall Street gained on the jobs data. Okay. Oh, yeah, that's right. It was an overnight, open overnight as a drop in new U.S. weekly jobless claims helped reinforce the notion that the economic recovery is on track. Okay, yeah, economic recovery is on track. So anyway, I thought this was kind of funny. I like to do this every now and then because there are a lot of people I know that follow the news. Like the news is absolutely their end all be all for everything. They watch the news and oh, if this headline comes out and I'm always arguing with them whether, is it the news that makes the market or is it the market that makes the news? And people are always looking for an excuse as to why did the market move up or why did it move down. And I'm like, you know what? The markets do what they want to do, and in a lot of cases, it's the news that then follows the market and says, "Oh, market's up, so it must be I don't know because of this." "Oh, market's down, it must be I don't know really, so I don't know, I'll just say it's because of this." So anyway, I thought this was kind of funny. I always like to point these out when I see them. The markets are all down and Wall Street gained on jobs data. I thought it was kind of funny. So anyway, back to the markets. And I said yesterday we were looking for confirmation today from the Bears. And we did get some confirmation today from the Bears. We got a second move down in the markets, which was good. I was actually kind of hoping for even a little bit more confirmation from the Bears. So it's still, on a 60 minute, looks very good. Look, we're starting to break some really strong areas of support back in this area. Now we've come back up and we're retesting these areas. If they hold as resistance, the Bears are on their way. They've got a good start right now, but it still has yet to be seen. If we get a pullback into this area here, where the 20 and the 50 are kind of coming together, it's another good opportunity to get short. Certainly very defensible there. If we blow past it and move up, you don't have a lot of risk in taking this type of a trade when you're at the two moving averages here. So something to think about. If it happens to move back up a little ways and gets back into this area, might want to think about taking a little short position out here and seeing where it goes. If it breaks above it, you want out. Period. Don't hold on, going, well, it's going to come back. No, don't worry about it. Maybe it will, maybe it won't. But don't take the chance that it actually will, because if it doesn't, you're going to be underwater quick. So, but this is a good place to maybe re-enter your shorts then if you want to get back into it. On the NDX, we saw another nice move down today in the markets. That was reflected in some of the bigger dogs like Apple, RIM, Goog, Baidu. Even took kind of a dive today. Came up very nicely at the end of the day, though. Those strong stocks, they don't stay down for long. If the market turns around and has a hint of going up, boy, those things turn on a dime. So you need to be very careful when shorting those stronger stocks. But still, 2 days down in a row, that's a good start, but got a lot of work to do down in here. Even more so on the SPX. Let's look at the weekly. You can see we got 1 day left. So now, actually, come to think of it, we can really start to look at these weeklies. And here's where I said it'll be interesting to see if it'll hold above the 200 period moving average by the end of the week. And to be honest, even if it does, and still stays in this area, this is not too convincing to me. I like to see on a break up, I like to see the following candle be a nice confirmation candle as well to be up. This one is not going to confirm anything for me if it finishes right in this area. We'll see what Friday brings, and we do have end of month next week, so they could try to window dress this a little bit, as people are calling it, window dressing, for the fund managers. Really, I don't know if I, believe in the whole window dressing thing. I just take what the charts give me, and the markets do what they're going to do, and hopefully I just try to be on the right side of the trade. So we'll see tomorrow if this thing closes down in this area or even below it. Obviously, there was no confirmation of this move to the upside, so we'll be watching that. SPX on a 60-minute here. You can see we've had two very nice moves to the downside. Really about 35 points in the last 2 days, from 1080 all the way down to 1045. Nice moves for the Bears. This is really about as good as it's been for them since what, September, beginning of September, when we had this little move here. Of course, that made what looked to be a big rounded bottom and somewhat of a cup and handle formation. I just call it a rounded bottom. I didn't get much of a handle over here, but we had then another big move to the upside. So I'm still cautious. Loved the action I saw yesterday. I figured there would be I was hoping anyway for another move down today, and we got it, which was good. But now that we're 2 days into it, now I'm going to start being a little bit more cautiously careful from a bear side. I want to see some of this old support hold as new resistance as it comes back up to it. I'll really be watching that close. On a daily, you can see we've come right back to the support area right here, and look at all the work we've got below us. Every one of these little blue lines you see is a potential support area, so we need to be watching these very closely. That's why I was kind of hoping for a little stronger move down by the Bears, a little bigger red candle on the daily. But the action we're seeing so far has been pretty good. So we'll take it. Couple days, couple good moves down, and we'll see. We'll see where we go tomorrow. Watch for it maybe to touch this 1040 area. I was talking about this yesterday as well on the SPX. Look for the 1040 to maybe hold this support. That is the 20 period moving average and this old support, or this what was resistance back here, and we kind of based on this area. So watch the 1050 obviously, and then the 1040 area below that on the SPX. We've got some areas of support coming in underneath of it. On the weekly, this is why I wait for the weekly candles to close. We got a little poke above and sure looked awful bullish, and then yanked it right back down after the Fed talked. So we'll see where we close tomorrow. Obviously, we have 1 day left in this candle, so I don't want to get ahead of myself on this, but so far, so good for the Bears. They would certainly love to hold this upper trend line area here. That would be an area that I'm sure they would not want to give up at this point, since it's a pretty strong trend line going back quite a few months, even years actually. The VIX had a nice confirming move up as the markets move down, so that's good for the Bears. However, we're still stuck below the 20 and the 50 moving averages on this. We've got this upper trend line here. We've got this previous resistance here. We've got a lot of work to do on the VIX if it's going to get really on its way. But notice how we came down, touched this upper trend line on the weekly, and now we've come back up again. Once again, to the fact that you need to wait for weekly candles to close before you really make an assessment of these weekly charts. So still looking for a push above the 20 and ultimately above the 30 to really start getting bearish. Look at this. Woohoo! Somebody went for a ride today. So this is one of the reasons that I and you hear me mention this a lot, but if the markets move up tomorrow, I'd be watching this one to the long side, or if the markets move down tomorrow, I'd be watching this one to the short side. This is a great example. Whereas we were in what looked to be kind of a nice little bull pullback actually here, believe it or not. But once the markets moved down, and this thing just could not hold itself up and absolutely crashed today. It was a good $2 move to the downside. Could have caught it below this low of 35 and rode it all the way down. Would have been hard to play this one today. I'll show you from a daily. From a daily, would have been difficult to play this one because it looked once again like a little bull pullback there. I was waiting for a break above 36 to get long this stock, and then of course it moved to the downside. You could have played it below the 20 on the daily as well if you wanted to play it that way, but I don't know. This has been a pretty strong stock for the most part, except for today, obviously. But for all practical purposes, it's been showing a lot of strength, and it still hasn't broken out of this trading range that it's in. You can see these two lines here. I would still need it to get below probably 32 before I'd look at it as a serious short. This one was very strong today, and these are the type of stocks you want to watch. Now, when these things, markets move down and these stocks move up, you found yourself a relatively strong stock. The breakout back here I mentioned, for those of you that caught it, stay with it. Your swing trade is still good. I even mentioned it above this area here as a long, and would have been a great play above this 36 area here. So for those of you that took those trades, great job. If you're swing trading it, you're still in it. If you're day trading it, you might have gotten out the first or second day, but you're still pulling some money out of this thing. Very strong to see this stock moving up when everything else is down.